What if I told you that most of what you've heard about investing is plainly wrong? All the crypto hype, day trading gurus, and guys flexing rented Lambos, they're not getting rich from investing. They're getting rich from selling you a dream. I'm 22 and I've already grown my own 6-figure portfolio, and I'm on a clear and predictable path to $1 million. And most importantly, I won't need luck and I won't need the perfect timing in buying and selling the stock. All I need is just to wait and give it time. So how do I know how to invest? I was very lucky to have been raised with a strong foundation. My parents both went to Harvard Business School and my mother worked in Wall Street at Bear Stearns and Goldman Sachs. But I've also studied countless books on how to build wealth myself. I even made a full biography video on my second channel about Charlie Munger, the man who was broke at 32 years old and became a billionaire through investing. In this video, I'm breaking down all you need to know to start investing today into 8 simple rules to build real, lasting, and most importantly, secure wealth. Rule number 1 is invest everything. Don't hoard cash because it loses value. I know of many guys, I have even many friends who just earn money, just put it on the side and just leave it be. They just have thousands of dollars just not invested, just as cash there. What you need to understand is this cash, if you just leave it be, it loses value. It's like leaving an ice cube outside and expecting it just to stay the same. No, the ice cube is melting outside. Charlie Munger, who was one of the most looked up individuals in investing, said cash is only for emergencies and flexibility. It's not for compounding. So actually, if you want to build wealth and get more wealthy, cash is the wrong thing to have. And the reason for that is very simple, it's inflation. Every year, cash loses its value. Since 1913, the average long-term inflation rate has been 3% per year. So every year, if you just leave your cash there, it basically loses around 3% of its value. And in contrast to this, as a historic average, if you have invested in the US stock market into the S&P 500, which are the biggest companies in the US stock market, you'd have a nominal return of 10% per year. So that means after inflation, the real return would have been 7% per year. That means if you would have invested your money just in the US stock market, you would have gained 7% per year. And if you didn't invest your money and just kept it in cash, you would have lost 3% per year. That means our rule is invest everything. Only, and I really mean only, have cash if you're meaning to buy or invest in something within a month. So that's my rule of thumb. If I'm looking to buy a car in the next month, then I will hold my cash and not invest it into something. But if I want to buy a car within maybe next year or something, I will invest that money right now and just take it out next year. Rule number 2 is be patient. Charlie Munger famously said, "The big money is not in the buying or selling, but in the waiting." This means you're not building your wealth by buying and selling stocks, but actually investing and waiting for the stock to rise. You're making practically passive money. You're making money by waiting, and you're not making money by being active and buying and selling a bunch. I can't tell you how many friends I have who tried day trading. I see so many young guys fall into this trap because they see some guy online who got lucky, made a bunch of money online, just made a video about it and said, yeah, I made $1 million today just from day trading. Then my friends expect to be able to make the same amount of money by day trading. But what you don't understand is day trading is literally like gambling. Munger considered day trading like trying to win the roulette wheel, except the odds are even worse. Let's look at some studies. There was a Taiwan day trader study from 1992 to 2006. It examined over 300,000 individual day traders on the Taiwan Stock Exchange, and it found that less than 1% of day traders consistently earned a positive abnormal returns on net fees. So that means from 300,000 day traders, less than 1% of them are actually earning money. A Brazilian futures trader study from 2013 to 2017 covered 20,000 novice day traders in Brazil's equity futures market, and it showed that approximately 97% of traders lost money, which is actually insane. 97% who try day trading lose money. Only 0.5% consistently made some profit. These are insane numbers. A US global analysis, a range of sources including the US SEC reports and academic summaries estimate that 80 to 90% or more of retail day traders actually lose money. These are really insane numbers. It's so sad. There's just one guy playing basically roulette and hitting the jackpot, and he's basically making a video on it, and creating a lot of hype, and then all the other guys think that they can play roulette and just make the same amount of money, which is absolutely stupid. It's just so sad, and I know so many guys who lost money with this and they don't seem to learn, but the numbers are actually stacked against you. You might as well just walk in a casino and try to win at roulette, which according to Charlie Munger, you'd have a better chance at building wealth playing roulette than day trading. If you want to build secure and lasting wealth, it will take years after years after years, and you have to be super patient, and it's really not exciting. You're not going to look at your portfolio and be amazed one day, even if you're starting at zero, and I really mean ground zero with $0. This is how you should start investing, by just working, putting money to the side. If you're a student right now and working jobs, put 100% you have into it, and in 10 and 20 years your wealth will compound. So don't get trapped into the get rich quick scheme, and very importantly, also don't get distracted by people who basically win the lottery and make a bunch of money today, because as you know, if you want to build lasting and secure wealth, this is like the only method to do it securely. So here comes more of the fun stuff. So what actually should you invest in if you're not day trading? Charlie Munger said our favorite holding period is forever. We're looking at companies that don't disappear anytime soon, or hopefully at all. We want to invest in companies that will be there for our lifetime. So here's the first actionable rule of thumb you can follow, which I also follow, which I heard from an investment banker, is you look at a business and think about their business model. Think about if this business model will be valuable in the next 10 years. Don't think about this business if this will make money tomorrow. Don't think about whether this business will get a spike next week. Don't think about this business if the CEO will do something crazy in a year. But actually think about their business model and think, will this business model actually grow in the next 10 years? And that's how I think about all the stocks in my portfolio. I think long term. I'm not planning on selling anything from my portfolio anytime soon, and I'm going to hold it for the next years. So what companies should you invest in? Rule number 4 is invest in what you understand. Charlie Munger called this the circle of competence principle. He said, stay within your circle. If you're not sure you understand it, you don't. This means actually allocating most of your money there where you are most competent in. So if you're into tech like me, I'm into tech companies, I invest more heavily in the tech field. If I were more interested in the real estate market, I would allocate more money in the real estate market, and so on. So invest in areas you're interested in companies you actually understand, instead of following other people's advice and trying to take risks. Rule number 5 in stocks, and this is the big one, I can't tell you how often my mother told me, don't put all your eggs in one basket. In my portfolio with my 6 figures, I diversified to 15 different stocks. The reason you should diversify is that some stocks might crash and burn. But as long as you diversify and don't put all your eggs on one stock, basically, the average of stocks will shoot up. And because you have the average of stocks shooting up, even though one stock might fall and burn, which will happen, some stocks which even seem to be good, they will fall. Because you're diversified and on average everything goes up, you will still on average be net positive. Charlie Munger agreed on this. He also said don't put all your eggs in one basket, but he also added don't put one egg in every basket either. So what you also at the same time don't want to do is invest in like 50 different stocks. You don't need to go crazy about this. You only need a few good ones you understand deeply. So you want to diversify enough so that you can sleep at night. In case one goes down, you will be good. But you shouldn't diversify that much that you can't have an overview and some of these stocks you don't understand. So you should understand all the companies you invest in. Rule number 6 is stay relatively low risk. And I want to emphasize this doesn't mean you shouldn't take risks at all, because if you don't take any risks, you probably also get less of a return. Personally, I like to take a lot of risks, but it does mean not to be stupid and put all your money on black, basically on a roulette game. So this is a quote from Charlie Munger. He said, "It's remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent." So that means as an investor, you shouldn't try to be intelligent. You shouldn't try to go out and try to search for the next $1 million idea. If you actually want to build lasting and secure wealth, you should just try to not be stupid. You shouldn't play with your money. You should just let it compound over time. Personally, I do not have any crypto. I do not really understand crypto, and I don't understand like the business model behind crypto because there is none. Crypto is basically just built on hype. Of course, people have made a lot of money from crypto because, for example, Bitcoin had this much amount of hype. Charlie Munger himself called crypto rat poisoned, and that is because Charlie Munger wants to invest in businesses that actually do something useful and generate cash. Crypto itself is basically just a currency built on hype. So if people believe it has value, it gains value, but if people don't believe in it, it will lose value and it can explode anytime. If you're investing into businesses, then you will have an actual business model behind it. But if you understand crypto and you want to take some sort of risk and you're understanding how this hype works and you think that this hype will continue to build, yes, you can invest in it. I'm not saying you should not, but I am saying you need to understand what you're investing in and you shouldn't take too much risk. Rule number 7 follows up on this. Don't follow the flow. The flow has dead fish. Often stock prices rise up just because of the hype. So if some big YouTube guru basically suggests the stock, many people will actually get the stock and the stock will get overhyped. That means the stock price rises not because the business is that valuable, but because so many people are buying it and believing in it. And at the second people will stop believing in it, it will drop. So it's literally like a hot air balloon. Charlie Munger said, if you're just following the herd, you're going to step in something. So I will give you some of my investment ideas and some of the companies I have invested in, but you still need to make up your own mind and you need to think about it yourself and you need to make your own judgment on what companies to actually invest in and not simply follow the hype. Rule number 8 is read, learn, and stay rational. According to Charlie Munger, the best investment you can make is in your own mind. The best investors are those who are lifelong learners. Nobody knows everything, and the person who learns continuously will come out on top. Another thing Charlie Munger said is go to bed smarter than you woke up. So every day your goal should be to learn something new, and that is actually how you compound your knowledge and your skills and get better at investing. Here are some tips to continuously learn. So one part is stay in the current, know about the news, know about government situations. Personally, it's not like I read the news every day, but you need to know what is going on in technology and the politics. And therefrom, you can already take a lot of knowledge into what businesses and companies to invest in right now. On the other hand, of learning to become wealthy, you should read Timeless Wealth Building Principles. My favorite book on building wealth, the one I recommend the most, is called The Richest Man in Babylon by George S. Clason. Personally, I will say I am not a reader. I'm a very slow reader, and if I read something, I forget everything. So what I recommend for those people is just to get Audible and listen to it as an audiobook. You will still learn super much. So The Richest Man in Babylon is a book for, I'd say, more or less beginners. It's a very easy read, and it's also quite easy to understand, and it actually teaches you how to go from zero to millions or even billions. Another book I recommend is called The Millionaire Next Door by Thomas J. Stahl. This is like a middle read. It teaches you like how millionaires operate. And the last book I recommend to you is The Intelligent Investor by Benjamin Graham. Personally, I'm only halfway through The Intelligent Investor because it's a super deep book. And to be honest, it's very hard to understand. So if you are a beginner, start with The Richest Man in Babylon. But between these three, there's definitely one good book for you and you should start reading today. I definitely recommend The Richest Man for Babylon for the beginners. That book genuinely changed the way I see wealth and how to build wealth. So let's get into the fun part. So what stocks do I personally invest in and actually recommend you invest in? So personally, I'm a tech guy. I play computer games. I build a lot of gaming setups. I look at tech companies. I am highly interested in tech, but also the field of tech in the next 10 to 20 to 50 years is going to grow rapidly. I already know these stocks I invest in, they will be big companies because technology is simply growing super fast right now and it's definitely not leaving. So some companies I invested in tech are Alphabet, so that is basically Google, Meta, Facebook, Instagram, WhatsApp. They have so many different companies right now under Meta. Nvidia is a big one where I made a lot of money. I invested into Nvidia already 1 or 2 years ago and they over doubled their value in that time frame. And I also invested into Amazon. So these are some of the big tech players I invested in. So I've also put some money into more stable stocks. I put money into Nestle, this drinking brand. They have more companies in the food and beverages segment. And because food and beverages or need it all the time, no matter if tech goes up or down, no matter if a war breaks out. I also invested into S&P 500, Berkshire Hathaway, and other ETFs. So if you don't know what to invest in at all, and you don't want to look at companies, and you don't want to check it at all, I just recommend you get the S&P 500, Berkshire Hathaway. They already combine a bunch of stocks and you don't need to think about that yourself. So these are going to be much less risk, more secure, but also you have less chance of getting a huge return. If this video gave you some new ideas and you're a student trying to build wealth, subscribe to the channel. On this channel, I will give you more tips on building wealth, and I'll see you guys next time.